Hello guys and girls, welcome back to my YouTube channel. Now we did take a sell trade on volatility 100 index. Now it is my duty to explain to you the strategy that I have used to get a sell entry on this pair. It is my hope that you will listen to this video very attentively so that you can learn my strategy and hence also be profitable in forex trading when you're trading on your own. Now the first thing that you have to do, as of course, is you have to go on the daily time frame. This is very important because on the daily time frame you will get a general outline of where this market actually is. Now on the daily time frame we can see that this market was on moving on an uptrend direction. I say it was moving in an uptrend direction because the market, as you can see, did already break this level right here. Hence the market already provided us with a daily shift. A daily shift occurs when the market breaks the previous lower high of the downtrend movement, which is exactly what it did right here. So the question comes, why did we enter a sell position while clearly the market did already break the downtrend movement and clearly the market was moving in an uptrend direction? Now this is very important because we know if the market is to be moving in an uptrend direction, it has to go in series of higher highs and higher lows. This is typically the way the market always moves while it is in an uptrend direction. Now, since we know no market moves in a clear straight line direction, meaning the market at some point has to retest to the previous broken structure before actually proceeding with in uptrend direction. So we know at some point the market will have to come and retest to this broken level, structural level right here. So at what point did we know that the market will exactly come to this point to retest right here? That it is when we went on the 1 hour time frame. Why? Because on the 1 hour time frame it will help you to know if the shift of the market has occurred. So for those guys who are new to trading, what's a shift of the market structure? What's a shift of the market structure? A shift of the market structure means this way. Let me do some illustration right here. Since we saw that this market was previously moving in an uptrend direction, now a shift occurs once the market breaks and starts to trade below the previous higher low, forming other series of lower lows and lower highs. You get my point? Now on the 1 hour time frame right here, at this point we saw, if you put the line graph, it's where a shift can be easily visible. Now we know here was our higher high, here was our higher high right here, and here was our higher low. Here was our higher low, this one. Now the moment the market traded below this level right here, what it did, it provided us with a liquidity, because we said liquidity engineering is formed in two ways. First, if the market provides you with a shift, and secondly, if the market provides you with a breakout. Now the moment the market provided us with a shift right here, all this area right here became our liquidity engineered level. And since we know that the market always has to come towards an area of engineering liquidity, we waited patiently for the market to retest to this point before actually taking our entries. As you can see, we are still in profit right here, and this is exactly where we got our entry with our stop loss just being above this engineering liquidity level that the market did provide us with after the shift of the market structure. Now just that simple concept alone, we were able to get this concept with those guys who are in my Telegram group. And if you want to join the Telegram group, the link can be found in the description below. I hope that this knowledge will be useful for you in the future in your trading, and I hope that you will review this video as many times as possible until this concept sticks in your head. I wish you a happy trading day, and bye bye.